Hey everybody, I'm back with another video. I'm very sorry that I've disappeared for quite some time. The last time I uploaded a video was probably about 2 years ago. That's crazy. It's actually quite crazy, I know that. And I'm really sorry to the class of 2025 that I couldn't upload more videos, but I will try to upload as much as I can now. I think university really did consume me, and I had a lot on my plate, so I'm trying to, come back and help where I can. So I hope this video is really helpful. Please don't forget to like, comment, share, and subscribe. And yeah, let's get into it. So what we're going to look at today is we're going to look at financial statements. Financial statements are going to be the topic that we're going to focus on today. The last topic that I did was the concept of the companies, the very first topic that you will learn in matric. You will find that under the channel Accounting by Abongile. Unfortunately, I do not have access to that channel anymore. I got kicked out, so I was now obligated to create a new one. So if you want that one, you'll have to go over to that channel and you'll find it there. So I'm just going to carry on with the new topic now. Basically, I provide a cheat sheet, an easier way for you to understand something, a concept. All right, so I try my best to make something as simple as I can. So let me see. So the first thing is we're just going to look at the users of the financial statements. Straightforward: shareholders, potential investors, SARS, the union. All right. That's as simple as it is. So this would basically just be an internal control question, a simple 3-4 mark question. So that's the nice thing about accounting in high school. It's much, they're not stingy with marks, and varsity is a different story. So yeah, so the next thing that we're also going to look at is with the financial statements, we know that there isn't one thing you have to know is in high school, we seem to think that there's only 2 types of financial statements, and that isn't true. We have five or 4, but I'm not going to go into depth because now I'm just going to end up going into university stuff. But the 3 that you're going to focus on, 4 that you're going to focus on, is going to be the notes to the financial statements that is deemed to be part of financial statements. The 8, 7, 9 notes that you do. And then the other one is the cash flow statement, the statement of comprehensive income, also / known as the income statement, and the balance sheet known as the statement of financial position. It's very important to note that with financial statements, that as I had stated, that we don't only have 2 or 3 financial statements, there's more. We know that the income statement has or deals with income and expenses, the income statement. When we deal with the balance sheet deals with assets and liabilities. So that's very important we understand. But the format will be received from your teachers will provide you a format of this. Basically, this video is not strictly only for matrics, because as a grade 10 student, you can also look at this video. It's basically for anyone because financial statements are learned throughout the whole FET phase. So 10, 11, and 12, you deal with financial statements. So you will receive the format from your teachers on that. I just tried to provide you with a cheat sheet and the basis on where to begin and where to start when trying to understand this topic. So we are going to, obviously, with the financial statements, there is year-end adjustments. So obviously, the simple ones that we have learned from grade 10 and 11, accrued income, which relates to interest income. Majority of the time, I always make the example of interest income because accrued income is, I always look at myself in the perspective of the company that I'm dealing with. So if I'm busy with ABC Limited, then I view myself as ABC Limited and I say, if I have accrued income, it's money that's owed to me, which is / owed to ABC. So you haven't received it as yet. But when it's accrued income and it relates to the current financial year, whether you've received it or not, you should add it in your income statement. That's very important. Same as an accrued expense, whether it relates, whether you haven't received it or you haven't paid it,
but you are expected to have paid it in the current year, you must account for it. So you must place it in your operating expenses in your income statement. You must place this in your other operating income in your income statement. That's very important. Just because you haven't received it does not mean you neglect it and you don't account for it. All right. Trading stock deficit, a trading stock deficit or a trading stock surplus, when does this come about? This comes about when we have a bookkeeper or any type of person that the company places to take notes and take charge or record the movement of the inventory within the year. So the company buys inventory from its supplier. The person has to record that they've received inventory. The company sells. The person records that they've sold the inventory. It's very important to understand that it originates from two things: the movement of the inventory throughout the year and the physical stock count that has to take place every time at every year end. That's very important to understand. So if we have the physical stock count is more than the movement, then initially we're going to have a surplus. So we're going to have a negative amount. And this would be a simple formula to be able to determine if it's a trading stock deficit or a trading stock surplus. Just take your trial balance amount, you add any retained stock by your debtors, you subtract any theft or fire, which are deemed to be abnormal losses. Selling stock, not any selling stock that you have not recorded as yet, and everything that relates to trading stock is accounted for at cost price. We know that, so that's at cost price. Returning stock to your creditors and any stock on hand as well is expected to be accounted for. And then the amount, if you get a negative amount, it's a surplus. If you get a positive amount, it's a deficit. It's very important to understand that if you have to cram this, then you must cram it. You must cram it. This is as easy as it, this is how it's going to look in matric. In grade 10, it would have been straightforward. Your trial balance subtracted by your stock on hand. Then you'd know whether there's a surplus or deficit. In matric, there is more to it. So if you have to cram that, then you must cram it. But that's very important. Then we have depreciation. Depreciation, we know we've learned it in grade 10, grade 11. With depreciation, there's basically three methods. You will learn the third method in varsity if you decide to continue with accounting further. And then, but however, in high school, we only know the two. So we know that we have the reducing/diminishing method or the straight line/fixed. Reducing, we know the depreciation in the first year will be less. It decreases as we move along. As the asset continues to be used, the depreciation on that asset decreases. But as a fixed or the straight line method, the depreciation remains the same. So that is known. Okay, I spoke about accrued expenses. Income received in advance. Basically, if the income relates to the following financial year, but you received it in the current financial year, you must remove it. If they say as a transaction that the bookkeeper included an amount that was supposed to have been received in the following year, financial year of assessment, you have to remove it. It does not relate to the current financial year. That's very important. Prepaid expenses. It's similar. You've paid an expense in advance. If it does not relate to the current year, it must be removed. You just look at your wording. Has the accountant or the bookkeeper accounted for it or not? Sometimes they tell you that the company has a prepaid expenditure, but the bookkeeper has not accounted for it. Therefore, you just ignore it because then you have nothing to do with it. You just go and add it in your balance sheet, but for your income statement, that has nothing to do with you. Right? So with the provision for bad debts, basically, if in 2025 you had made a provision that 500 Rand worth of your debtors wouldn't pay, and then 400 Rand worth of them don't pay actually in the 2026 year, then what would happen is there would be 100 Rand income. Because if you view it in this specific way, I say I'm expecting that 500 Rand worth of my debtors won't pay me, meaning I'm expecting that I will not receive 500 Rand. But then the year moves along, and then I realize that out of this 500, 400 were not able to pay, meaning the 100 Rand, the difference between the two is 100 Rand were able to pay, meaning I received 100 Rand worth of income. because that excess 100 Rand between this two, therefore that would have been an income. And then the inverse of it would obviously be an expense. So this would be an income and the inverse of it would be an expense, right? Incorrect net profit. This part of the video only applies to matrics. So if you are not in matrics, so you don't have to pay attention to this part as yet. Like I had stated, in matric there's too much content to test for them to actually ask you for a full income statement. So majority of the time, to save time, because there's a lot of topics to test in matric, they're going to provide you with an incorrect net profit and you have to correct it. They tell you the incorrect net profit, for example. Sorry. Okay. The incorrect net profit is 700,000, and then they provide you with all these adjustments. They tell you, very important to understand, if you have a pen and paper next to you, write this down. If you have to memorize it, then you'll memorize it, because this is a nice cheat sheet. Any type of omitted income you must add. Any type of omitted expenses you must subtract. So rent income, discount received, provision for bad debts, the decrease, very important. Remember, because I showed you the example. I showed you this example, the 500 and the 400 example. So this increase would therefore be this part, this decrease that you would account for there. Then you would have the asset on sale, profit on sale of the asset. The assets being the accrued income and prepaid expenses, your trading stock surplus, your consumable stores on hand, and your sales. Then any type of omitted expenses, accrued expense, loss on disposal of asset, provision for bad debts, the increase, which would be the inverse of the one that I showed you. So to just clarify again, it would be this one, the 400 and the 500 being the expense, right? And then we would have your depreciation that has not been considered, and then liabilities being your deferred income, your accrued expenses, and your cost of sales. It's very important that you understand that majority of the time in matric, they're going to provide you with an incorrect net profit and you're going to have to correct it. So there is no time in 2 hours for you to actually draft a full income statement from scratch. But I really hope this video did help you. I will provide as much more videos as possible as soon as I can. I'll upload as much as I can now because I know I'll be pretty much consumed again the whole year. So I hope this helped. Thank you.